Okay, thank you, Ms. Zsuzsanna, for share such of a very insightful presentation. So basically, I also took some notes on your presentation. This is a very significant. This is a very significant changes on insurance entities. Basically, it was set initially to be effective by 1st January 2021, but based on the proposed amendment, it will be deferred until 1st January 2023. And then it also, the proposed amendments also contain some other amendments, which you mentioned that most of the insurance entities are very welcome with the amendments. And then some of the key factors, some of the implementation consideration that you share also, it is very important to have the project planning and management, although it is deferred until 1st January 2023, but the insurance entities have to make sure that they are ready not only to prepare the financial statement, but also to have proper business process system and data in terms of this new accounting standard. And then now, basically, we will enter into the next session, which is the panel discussion. Before enter into the panel discussion, I would like to remind you also, if you have questions about this event, and then you can post your questions in the Slido. And later on, we will pick some questions, and then the speakers will try to answer your questions. So now we are entering the panel discussion. Before the panel discussion, two panel members would like to share their insights regarding the implementation challenges, the impact of IFRS 17 on their business strategy, and the importance of having the industry alignment. Our first presenter is Mr. Nick Holder. He is the CFO of Prudential Indonesia. He joined Prudential in 2002, and he has worked for Prudential Group in 6 countries, including UK, Hong Kong, Malaysia, Thailand, Vietnam, and now Indonesia. He is also currently a honorary secretary of the British Chamber of Commerce in Indonesia and a board member of the European Chamber of Commerce. Without any further ado, I would like to welcome our presenter, Mr. Nick. The time is yours.
Thanks very much, Alex. Really appreciate the introduction. We've heard about IFRS 17 at the high level and at the accounting concept level. What I'm going to try and do now is to spend a few minutes explaining how IFRS 17 has been impacting us in terms of our preparations for it and our expectations about the future within Prudential in Indonesia. Now, to my mind, IFRS 17 is like one of those big, difficult that initially when I heard about it was going to be a very long time in the future, and maybe it wouldn't affect me. Maybe I'll be able to step out of the way and find myself a different job outside finance before it had any big sort of impact. But I can't say that's true anymore. It's clear that IFRS 17 is happening. It's happening soon. And while some people might be thinking 2023 is a long way away, in terms of the preparations that are needed to be started now, that is a very short timeline to delivery. So it's very important that all the companies around the world that are going to be affected by IFRS 17, and that includes the companies in Indonesia, and all the other stakeholders. I'll explain in a minute about the impacts, perhaps from a regulatory or from a tax perspective. It's time for them to start preparing. So if we go to the next slide, Go on one slide. There you go. First of all, just to give a sense of the areas within Prudential that we see are going to be impacted by this new accounting standard. So begin at the top. Probably the biggest single impact is in terms of data. Data requirements across the organization are going to change. They're going to grow significantly. We're going to need much more granular data. Cash flows, discount rates, risk adjustments, all of these are going to need to be captured and stored systematically. And that, as we know, requires a significant technology infrastructure. People, we need to educate our finance staff. We need to educate our actuarial staff. We need to educate our risk staff. But we need to educate all the managers and product designers and even the salespeople across the organization so that they understand what IFRS 17 means. And we need to look at the strategy of the company. We want to be able to produce more sustainable, less volatile profit, but profit that's reported according to the new standard. So we need to understand the levers and drivers of IFRS 17 profit from the products that we sell and the products that we sell in the future. We need to explain all this to our investors. So anyone who's interested in the performance of Prudential in Indonesia needs to know what that performance looks like under IFRS 17, and it will not be the same. And they need to know what a good performance is. So we need to help them understand, as we produce these new numbers, how to interpret them. Technology, we're finding we have to change and update very many of the tools that we use within finance, actuarial valuations, reporting systems, data warehouses. Across the P, this is a big technology exercise. Process, we need to improve the processes. We always need to improve the processes, but IFRS 17 makes it essential. Particularly IFRS 17 requires close collaboration and coordination of process in the areas that interface between actuarial, between finance, and between IT. Our project team in IFRS 17 requires all three of those functions to work very closely together. In terms of reporting, we have reporting timelines. They need to be reviewed, they need to be updated. We have the same pressures to produce information on a timely basis, but at the same time we have a lot more processes to run, and some of them are very data intensive. So we're really having to look out at all the manual processes. All the delays, the little delays we've tolerated in the past just won't be sustainable if we're going to be able to produce our IFRS 17 numbers on a timely basis. Otherwise, we might well be looking at pushing out a reporting time frame from a week or so to nearly a month or so, and that's just not going to be acceptable. Finally, if we look in the bottom right there at the organization, we're going to be asking questions around how is the business managed and measured in the future, including measurement of the company and its executive performance. Very significant changes to the way our company is going to be operated in the future. And all this is done, of course, with the support of our regional office. They've been providing us lots of support regionally as well. And the interaction that we have with them will be changing, and the KPIs they set us in Indonesia will be changing. If we go to the next slide. So this is some of the implementation challenges that we've been looking at. We've had our project up and running now for probably 18 months to 2 years. And we found that there are a number of areas that really require focus from the project team. The first obvious area is obviously accounting and reporting. IFRS 17 impacts up to 90% of the chart of accounts. It really affects nearly everything within the finance area. There's that pressure on timeline, there's that pressure on accuracy. There's going to be ongoing challenges in terms of updating accounting policies, and those policies will really have to tie closely to the products that we're selling within the company. We have to also adapt and allow for our Sharia business. Our Sharia business is very substantial. Our Sharia business is something that at the moment isn't really allowed for explicitly within IFRS 17. And this is a great opportunity for Indonesia to see as a lead possibly in collaboration with some of the other larger Sharia markets like Malaysia or the Middle East, to set out the the interpretations and the standard as it would like to see it applied in relation to Sharia. We're very focused in terms of the reporting timetable. We're working it out day by day, hour by hour. The timetable becomes much more ambitious because we require parallel reporting. What do I mean by parallel reporting? I mean there will be a difference in the implementation date between the requirement for IFRS 17 for our international accounts in 2023 and for the local implementation is expected to be at least a couple of years later. We also need to understand what will be the reporting requirements for tax and for solvency. It's possible that we will have for a very long period of time several different bases of reporting, and that requires more effort. Then again, just to emphasize that really fundamental shift in the way that data is stored and used within the finance department. And that changes the way our source system operates. It needs to be enhanced, and we need to build new systems to fill in the gaps, if you like, on the data and the data points that we need to report the results under IFRS 17. Final point I'd make on this slide is probably the most important one, that third circle in the top row there, which is around people. All of us who work in insurance in Indonesia know that it's very hard to recruit people of a good caliber in the areas of finance and actuarial. There's a limited supply of actuaries, there's a limited supply of accountants. And what IFRS 17 needs is really needs very special people, actuaries who understand accounting issues or accountants who understand actuarial issues. And these people very scarce in this market. We can expect these skills to be in very high demand in the future. The supply in Indonesia is limited. There is some scope perhaps to bringing in some short-term consultants from overseas, but those resources will be competed for as well in their home markets, and we know that that's not a long-term sustainable solution for Indonesia. So people become very significant. We go to the next slide. This looks ahead and thinks a little bit about how will IFRS 17 affect the way that we run our business. What are we going to do differently? Well, if we start at the top with product strategy, because we have a different way of measuring insurance contracts, and because we have a need to identify particularly unprofitable, onerous products from day one, we think we're going to be looking at different products and applying different criteria before we launch products. I think this is potentially a good thing for Indonesia, with all the companies carefully identifying the returns from their products and publishing them in a consistent way. It may remove some of the missteps that we've seen in the recent past where some products that perhaps weren't properly risk managed were launched to the market. But we're really going to be putting our existing products under scrutiny and thinking carefully about what products we can launch in the future. The next circle is around analytical capability. We're going to have a lot more data, as I mentioned, and what this means is we feel we'll be able to manage the business more effectively going forward. We'll have more analytical capabilities, they'll be quicker, they'll be more detailed. We hope this means that people will be able to take better decisions in the future. And hopefully it means finance is spending less time on gathering information manually and is able to spend more time partnering the business. The third circle, around performance management, we're going to be putting in place, we think, some new KPIs within the business. Just need to think what these might be from a sales perspective. A lot of people set top line targets for sales. Some now also try and put in some profitability targets. Those targets now are going to be something along the lines of contractual service margin. How much new contractual service margin have you generated in the past year? So some of those targets are going to be quite different. And they're not going to be well understood at first. So there's that education and training requirement, again, that will need to be made to make sure that these are understood. and effective. Probably also our measures of IFRS profit will change as well. The insurance result will become very important and may actually replace the IFRS operating profit. We also need to consider the impact of the tax on our profitability reported, as we don't yet know what basis tax will be calculated on. The last circle there at the top around investor relations, our market messaging is going to have to be different. We're probably going to have to be even more transparent and open. Because IFRS 17 will help the different insurers to produce more consistent results, it's likely that there'll be more questions asked and more insightful questions asked by investors and potential investors in the industry. And they're likely to want to know more and slightly different information around risk assumptions, around the sensitivity of the results. And all of these pieces will have knock-on impacts in terms of our reinsurance strategy, our risk management, how much dividend we can pay, because the retained profits and the profitability will be different, and may drive a wave of M&A as well, because now we can see how the different companies are performing. We may wish to try and acquire some of them, or at the same time wish to dispose of some parts of our business which on an IFRS 17 basis didn't appear to be so profitable. Okay, if we go to the last slide, I'd just like to highlight here a few of the areas where it's very important that the industry works together with the various stakeholders from the tax office in Indonesia, with the OJK, with the industry associations, because these are very specific local areas of the implementation of IFRS 17 that perhaps we won't get so much assistance from our head office, we won't get assistance from people who are drafting the accounting standard. We need to work out these things by ourselves. So the first one is obviously tax implications. What basis of accounting will the tax office use for taxing us in future? Will there be any transitional impact? And will there be any ability to spread tax payments to match the release of CSM going forward as it's released? We need to work out something practical here that both sides feel is fair. In terms of the Sharia business, we need to work on some appropriate assumptions, actuarial assumptions for that business. Do we need any specific disclosures around this business? And finally, as we know, we have a regulatory deadline to spin off our Sharia businesses that's coming up quite soon and has a very similar implementation dates for introduction of IFRS 17. So how will those two changes interact with each other? And particularly if some people are thinking of listing their Sharia businesses on the Indonesian Stock Exchange, there may not be a good track record of profit, and the new profit may be on a different basis, the IFRS 17 basis. In terms of regulatory impacts, perhaps just highlight there what bases will be used going forward for regulatory returns, what bases will be used for solvency returns. So you can see, in summary, there's some important issues that we need to work on here in Indonesia. I think this forms a great way of starting discussion, that dialogue. Thank you very much.
Okay, thank you very much, Mr. Nick Holder, for the insightful presentation on the implementation journey of Prudential Indonesia in implementing IFRS 17. Then we will move to our second presenter in this panel discussion. The second presenter is Ms. Sandra Zhao. A brief introduction about Ms. Sandra. She is a head of branch management and tax from Citic Prudential Life Insurance in China. Previously, she also held several key finance roles in both life and also general insurance companies in Switzerland, UK, and London. Without any further ado, I would like to welcome the presenter. Ms. Sandra, the time is yours.
Thank you, Alex. Today I'm going to have some brief discussion with everyone about the impact of IFRS on the general impact and the impact on income and the impact on data and system procedure, etc. And the project plans of Citic Pro. So if we can go into the next slide, which is my content, and then we go straight to page 3. So basically we, so in terms of, if we could keep going down for the next 2 pages, I'll start with the general impact. So basically the IFRS 17, as everyone has just mentioned, it has a great impact, or what we call the most radical change in accountancy faced by insurance industry. And really it covers various fields such as accounting, actuarial, IT, and taxation, as well as supervision system, so regulatory system, etc. Also need to understand the impact of IFRS 17. If we keep going down to next page, and really what we're trying to going into the detail is the various impact will change internal, external reporting, as well as regulatory such as solvency and taxation, and the investor relationship, credit rating, portfolio management, as well as the internal procedure, IT system, as well as data, product pricing and development, as well as what we just mentioned, Nick just mentioned, the KPIs and performance management system and remuneration, as well as people. In terms of, there's very little people who understand accountants well as actuarial. So having the knowledge of both sides is really the bridge people is really is really limited in the industry, not just in Indonesia, but as well as in China. And we believe IFRS 17 will force insurance industry, not only general insurance, as well as life insurance, to boost its internal system, as well as make system transformation and modernization. So really it starts from data and making first changes into process and procedures. If we go into the next pages, the impact on income. Previously, as ICAEW leaders has mentioned, that it will make significant changes on the impact on the income side of the insurance industry. And what we currently see is, so it's basically the present value of premium income, so the income side of the insurance industry. Whereas changing to IFRS 17, certain portfolio component will be excluded, such as surrender payments, survival benefit, maturity payment, etc. They are no longer counted in income for insurance contract. So income will be confirmed over the period in terms of the contract along the service provided in the contract and the release of company risks. So it's very different from how income is generated currently, and we believe there will be a significant decline in income for insurance industry, and the loss from the new services will be embedded in the financial statement immediately. So anticipate there will be mismatch between loss and profit in the later years. If we go into the next pages on the also on the impact, also like Nick has mentioned, the impact on data, system, procedure on all business field will be arising after IFRS 17 is implemented. Currently, we understand this is a very complicated and systematic task to making the changes, the migration, and there will be a high demand of company service data. The existing system and the infrastructure will not be able to provide the level of information that required. It required the company, so from the data perspective, financial data, actuarial data, the group the group of policy, the detail level of data will be very, very different from how it's managed currently. And also changing of actuarial system along with chart of account and general ledger accounting engine, the basic accounting system, and will make significant changes. And also in my appendix, I have disclosed that there's detailed changes on how this impacts the financial statement. And so basically, if we go to appendix 2 in page number 10, it gives everyone brief disclosure of how this insurance service fundamental changes on the presentation of financial statement, and you can see the element of release of CSM and anticipated claims cost will go into the income of insurance contract, whereas the interest accrued and will goes to the financial loss and of insurance, and also the total comprehensive income, etc. So it's gonna look very different from the P&L of current reporting. And if we move into the next page, and give everyone a brief disclosure of how the plan looks like. Within the Citic Pro, or within China, we tend to divide this IFRS 17 project into phase 1 and phase 2. And the current market, we have the data here. Basically, up till now, only 4 major players within China industry, Ping An, CPIC, AIA, and Dajia, those 4 insurance players are now have already moved into phase 2. Currently, majority of the industry is still in phase 1, gap analysis and the blueprint. And also we have made some analysis on the impact on business field. So most of the insurance players believe that those changes will impact on the IFRS 17 will make the most significant impact on the 4 business fields, including product design pricing and cost allocation, investment strategy, and risk management. This is the market analysis or market research result for the pool from the industry. And so in terms of phase 1, everyone is focusing on the resource policy making, or what we call the model decision, and the impact analysis and gap analysis and blueprint. And for those detailed information, I've also prepared appendix number 5. In terms of phase 1, I think majority of the China insurance player have already made to 80% of phase 1, and into making changes on the architect of profit model and chart of account policy, etc. And also high-level implementation plan and planning of general system architect and reporting on the system selection for the gap analysis, etc. So that's giving everyone a brief update on where the industry is, and also where China is in the scope of IFRS 17 implementation. And finally, in terms of the industry standard, same as IAS, China also has the domestic requirement from the Ministry of Finance, and the effective date is exactly the same as IASB's, which is January 1st, 2022. So that's where we are, and hopefully this information will help everyone to understand where the industry is, and the information provided will help everyone making decisions on implementation. Thanks.